Markets will remain closed on Tuesday the 2nd of October, Gandhi Jayanti. The fear of a liquidity contagion caused chaos in the markets during the last week of September. There are many reasons that affected the liquidity. They include the advance tax payments, falling exchange value of INR to USD which caused the widening of trade gap, GST payments, decline in the minimum stipulated funds at the disposal of non-banking finance companies, payments crisis of IL&FC, withdrawal of margin funding to clients by brokers, compulsory squaring up of the leveraged positions held by traders, and more than 25% crash in the share price of Yes Bank and Dewan Housing Finance. Whatever it was, the investors lost heavily in the last 3 days of the volatile week. However, a hope of recovery in the coming week could not be given up lost. To check the contagion of liquidity, Reserve Bank of India was quick in taking remedial measures. The central bank of the country pumped liquidity into the system by reducing the limit on statutory liquidity ratio, popularly known as SLR, by 2 percentage points. This measure itself would release about 2 lakh crore rupees into the banking sector. These funds would in turn provide the essential liquidity to the economy. The Government of India need not borrow as much of funds estimated in the budget 2018-19. In the second half of this financial year, the centre's borrowings would be lesser by 70,000 rupees crore. To that extent it could save on interest expenses. And the deficit also must come down. Bond markets too would cool down. Interest rates in the system expected to be softened. Already, the GOI bonds worth 3,800 rupees find no takers in the auction held on Friday, the 28th of September. Interest rates get cheaper by a notch to 8.02% from 8.03%. Reserve Bank is going to decide on future course of action on key rates on Friday, the 5th of October when it reviews the credit policy. The decision will be announced at 2:30 p.m. on the same day. In the changed scenario, RBI may not hike policy rates. IL&FS is also in the process of finding a solution to its problem. Part of it is to mobilize 4,500 rupees crore via rights issue and another 3,500 rupees crore in the form of short-term borrowings from LIC and SEBI. Meanwhile, it is scripting more lasting plan that intends to dispose of assets worth 30,000 rupees crore soon. IL&FS Securities Services Limited, the subsidiary of IL&FS, has just paid back a loan of 300 crore rupees with interest it owed to LIC. As a preemptive, along with subsidiaries the company itself approached the National Company Law Tribunal seeking protection from lenders. This way, it will get some breathing time from lenders to service their debt. In the meantime, things will settle down slowly. And the payments crisis will get an end. As markets worried that the IL&FS liquidity would take a contagious shape to affect other NBFC companies, Dewan Housing Finance shares lost 50% of their market value. What is interesting is that Dewan Housing promptly honored the commercial paper worth 575 crore rupees and repaid debts to the tune of 200 crore rupees to the banks on the 21st of September. It prepaid another 581 crore rupees including interest on the 27th of September, before the due date. Even though it failed to get the new loans as expected, it will have month-end surplus funds of 4,986 rupees crore on the 31st of October 2018. Similarly, 2,237 rupees crore on the 30th of November, 3,576 rupees crore on the 31st of December, 5,599 rupees crore on the 31st of January, 7,620 rupees crore on the 28th of February. The rating agencies also reaffirmed DHFL credit rating. There is no asset-liability mismatch at all. That is why BSP Paribas arbitrage funds made the turbulence in the share price. Price an opportunity and bought 50 lakh shares at a price beaten down price of 300 rupees per share by investing about 150 crore rupees. One can consider this stock for the long term at the current prices. BSE and NSE gearing up to begin commodity derivative trading from Monday the 1st of October and Friday the 12th of October respectively. While in SE is also launching mini gold contracts that are affordable to small investors, Bombay Stock Exchange decided not to charge any fee on derivative transactions for 1 year. The current leader in this segment is the Multi-Commodity Exchange of India Limited, MCXBSE code 5,34,091. It will be affected by the development. Its turnover will decrease. It may lose market capitalization to some extent. As the improvement in liquidity anticipated, markets may try to take a U-turn.